In this chapter, we're now moving on to the standard costing and variance analysis part of the syllabus. But obviously there are lots of links here still with budgeting because a standard cost is part of the budget. Now, you will have covered standard costing before in your earlier studies, but might just need a little bit of a reminder as to how this all works. So in F5, you could be asked to explain the use of standard costs, and you need to refamiliarise yourself with what a standard cost card looks like. You also need to think about the methods used to get those standard costs and the different types of costs that are possible. Now, we've already talked about controllability and the principle that you should only be held responsible for something that you are actually responsible for. So that comes into standards as well, and the level that standards is set. The final bit that's very important is waste and idle time. And here you need to understand what's meant by that and how that can be built into a budget. We're going to look at it again later with variance analysis because the variance for waste and idle time can also be calculated.
So we start off then the chapter by thinking about what is meant by a standard. Well, a standard is a bit like a recipe. It's a plan of what we're going to do, and it's prepared in advance by management based on what they think is likely to happen. Standards can occur then for all sorts of different things. In F5, we normally talk about standards in manufacturing and think about standard time to produce or standard amount of materials. But in reality, companies can use standards in many different ways. And there are a couple of examples given to you here. So the standard time for repairing the sort of average car or punctualities for a train company. There are many other ones as well then which don't relate to cost at all. So there's an acceptable standard time then for an ambulance to turn up to an emergency. And the plan is then to get the ambulances there in say 3 minutes, and any deviations from that standard can be investigated to see what's preventing the crews from getting to the emergency on time. So a standard time then can exist, but we're going to be mostly thinking about standard costs. And a standard cost then is an estimate in advance of how long and how much, as a result of how long we think it's going to take to cost something. Standards then have something that have come up before early on with costing, and we were preparing standard costing in F2 as well. So under marginal costing or absorption costing, standard cost cards can be produced. Just a quick recap then here, this is an absorption costing standard cost card because it's based on the full production cost. So it includes an amount of fixed overheads. If this were the marginal costing cost card, then it would show a total variable cost of $35 per unit. So where does the standard come from? Well, the standard cost for materials is $15, and that is based on the expectation that the company will buy 5 kilograms of material for each product, which will cost $3 per kilogram. So there's two elements here in the standard. There's expected use and there's expected cost of materials. Just a quick reminder then of the purposes of standards. So we can use them for decision making, most notably in a limiting factor situation, we were using the standard costs. We can also use them for budgets, thinking about how much resources we're going to need in terms of how many labour hours we're going to need, as well as how much money we're going to need to pay labour's wages. We can use them when we're doing variances then, when we're doing control technique, by comparing the standard costs and revenues with the actual costs and revenues. Once those variances have been calculated, they can use for performance evaluation to see whether what we thought was going to happen actually did happen. And another use then is to value inventory. So the standard IAS2 says that inventory should be valued then at its standard cost. And that's an accepted practice because it's very straightforward. Rather than working out the actual costs under something like FIFO or weighted average, instead you can just use the standard cost. There are 4 different types then of standards, and you need to make sure then that you're happy with the definitions of these, especially likely in a Section A question. So imagine then that you are thinking about running your first marathon and you're trying to decide how quickly you should be able to do it. What's your target or your standard time? You could find out the speed of the fastest person who's ever run a marathon, and you could say, right, I'm going to aim to do it even faster than that, to break the world record or to equal the world record in marathon running. So having researched the world record marathon time then, which is held by Dennis Kimito, of 2 hours, 2 minutes and 57 seconds, you could set that as your standard. The problem with this, however, is that as you're unlikely to be a world record marathon runner, you're going to end up not being able to meet that target time. So that assumes then that you're the best and that there's no weaknesses, no breakdowns in the system. But if you're unable to achieve that level of efficiency, once you've got going around the marathon and you've reached the 2 hours and 3 minutes point and you know that that hasn't been achieved, then you're going to feel demotivated. So an ideal standard then assumes that there's no wastage in the system, that people don't take breaks and the machines don't break down, and there are never any issues. So it's unrealistic, and the minute something goes wrong, it's demotivating because it can't be met. The second basis then is an attainable standard, something which is challenging but achievable. So setting yourself a realistic target is going to mean that you're challenged, and therefore you're going to improve from your current position. So challenging but achievable is another phrase that's often used to mean an attainable standard. By setting an attainable standard, there should be some improvements, but it shouldn't be impossible to achieve. So you might be looking to better your current personal best time. Alternatively, there's a current standard, which is what you can currently achieve based on efficiency and achievements at the moment. The issue with a current standard is that it doesn't look to improve the situation and it doesn't seek to make improvements. So all that's going to happen here is you're going to carry on running the marathon at the same pace that you could. Finally then, we've got a basic standard or a historic standard, which might be looking at, say, how fast you could run when you were at school. It doesn't include any changes or any efficiencies that has been found. So the best standard then for performance management is to use an attainable standard. We have 2 statements here then that have been made about different types of standards which can be used in standard costing. This gives us an opportunity to see how the information in the chapter could be tested in a Section A question. So we need to think about these statements then and whether they are true. The first one, current standards provide the best. So that implies that there is no better way of doing this. So the current standards then are deemed to be the best for budgeting. And the reason cited is because they represent an achievable level of productivity. This statement then is not true because using current standards does not provide any incentive to make improvements. It's just saying that maintaining the status quo is going to be acceptable. Second statement then, ideal standards provide a useful short-term target for standard setting because it leads to improvements. So having said that the first one is incorrect because we need to look at improvements, you might be tempted to think that the second one is actually correct. However, ideal standards aren't the best ones either because they can't be achieved in the short term and so therefore may be demotivating, because all that's going to happen is people will fail if these are set as their targets. They might be useful for longer term targets or where to aim, but because we can't achieve them in the short term, this isn't true either. So in fact, the best standard for targets to be used is one that is attainable, challenging but achievable, recognising the need to make some improvement but not trying to make it all at once. So neither of these statements are correct. The answer is C. So here we're thinking about what we need when we're establishing the standard cost of materials to make a new product. So we're looking at what the standard cost then for a kilogram of material should be when making a new product. And we're thinking about what the purchasing department are going to need to take into consideration when they're setting this standard cost. Forecast sales levels and amount of wastage expected are the items that have been given to us. So if we're thinking then about what's going to affect price, well, forecast sales will, because we'll be looking at quantity. The more you're purchasing, because the more you're going to be making, the likelihood of getting a bulk quantity discount increases. Amount of wastage will be relevant for the standard quantity per unit, but it's not going to be relevant for the purchase price. So it's going to affect then the amount that we might need of materials, but it's not actually going to affect the purchase price. So the answer here then is A. So budgets themselves then are very similar to standards. Both will have an impact on motivation of employees. So setting standards and setting budgets both act as targets for employees to achieve. And a standard will generally be used as a driver to create the budget. So a standard used first to create the budget, and both of those are used for control purposes. The slight differences though that you need to be aware of is that standards are set per unit, whereas budgets will be set in total. So you might have a standard labour time per unit, but a total labour budget for the week. Standards then are only used in areas of repetition, whereas you might need a budget for one-off items, so for example a redecoration or marketing, as well as the budgets for the repetitive areas. Standards then can be financial and often will be, but they can also be non-financial targets, so for example defect rates, whereas budgets are always going to be expressed as a financial target.
So if we look at the summary, key things from this chapter, first of all, identifying what a standard is. Remember, the standard is a target cost effectively that we prepare in advance based on what we think is going to happen over the coming year. Standards can be used for many items. We use it as a way of evaluating our performance and controlling our business. It can help us with our decision making. Use it to then feed our budgeting, or we could even use it for valuing our inventory. In terms of the level of standard that we can set, we've got 4 types. Ideal, which remember is perfection. The attainable, which is, if I can call it this, doable stretch. Current, so whatever we did this year. And then basic, so this is a past standard. Now, in order to drive the best possible results, what we should be going for is the attainable standard. When we set our standards, we need to think about what the price will be in the future, how much we need to use. So we need to think about quality, the quantity, wastage, efficiencies, price inflation, etc. What's the difference between a standard and a budget? Well, standards are set at a unit level Budgets are for the whole business. And very often what we do for our budget is gross up those standards. We take the standard cost and apply that to the volumes that we're expecting the business to do. Don't forget that we may need to build in an allowance for wastage and for idle time. If we don't do that, our standards are at that ideal level, perfection. We're not going to achieve those. We know we're not going to achieve those, so it's going to demotivate. And the other thing is, it's always going to look like we're performing badly when actually it wasn't a fair target in the first place. Now, if we've got to build either wastage or idle time into a budget or a standard, just remember that if the wastage happens before we start making the items, we need to gross up our purchases budget. If it happens once we start production, then what we need to do is gross up the production budget so that we're making more units that will therefore then be able to cope with that wastage and still get enough good units out.